All right, what's going on, guys? Jeff here. Today is Friday, and I know that some of you guys actually came to drop me a DM on Instagram. And if you're not following me on Instagram, right here, link at on Kauza. All right, so some of you actually told me to actually put the weekly trades at the front of the video so that you guys can actually get through the weekly trades as soon as you can, because sometimes you're not that interested in news. So fair enough. I do get that. Hold on, I don't know why. Okay, so weekly trades. I'm gonna tell you guys my weekly trades. Although this is a kind of a little bit of a foreshadow that I've already done for the past 2 weeks, as it is. Futu puts, okay, Futu puts. I already made about $4,000 from my Futu puts yesterday. After Futu Holdings, which is also the company behind a Mumu trading platform. And if you want to join me to trade with Mumu, okay, link down in the description box below. You can get like 5 free stocks with my link down below as well. All right, so Futu Holdings Limited yesterday dropped a whopping 12.94%, even in the after hours going down a little bit more of a 2% or so. All right, so Futu Holdings went down a lot, and that is one of the reasons why I kept on buying puts on Futu. Okay, I named all my concern throughout the weeks. I actually thought that I was going to be wrong about it, but I'm very glad that I stuck onto it and I managed to sell off 40% of the puts that I do have, and I'm waiting for what is going to be coming for the week after. Okay, so of course, right now the Futu Holdings is up 9%. So actually, yesterday I made about 64% on all my Futu all my Futu puts as it is. And then right now I'm about my cost basis for my Futu puts, my remaining 60% is very low, to say the least. And I might even get more Futu puts later on if this pricing continues to go up. All right, next up, I did sell calls on Snapchat. I did sell calls on Robinhood, and I did sell calls on Lemonade, and I sold calls on Peloton. All right, so same thing. For Robinhood, the day that I told you guys about how Robinhood went to the moon, okay, I explained to you guys why Robinhood was a good stock, in my opinion. Okay, when Robinhood went up 24%, okay, it only became so clear to me that I have to sell some calls. Okay, right now I have about 500 shares of Robinhood, so it only makes sense for me to just sell 5 contracts on my Robinhood calls. And those are doing really well, because Robinhood basically just went back down 7% yesterday as well. And I'm happy that I did what I did, simply because I understand how the market is. Okay, as much as I believe in a company, okay, I believe in Robinhood a lot, but just on sheer belief alone, I don't think that a company would do well, especially in this sort of market. And I even predicted it early in January, saying that in 2022 we're going to be having a sideways market. Okay, I do not think that we are going to suddenly have this humongous volatility run up all the way to the all-time high for every single stock. I don't think that we are in the right market for us to suddenly go to the moon and beyond. And because of that, whenever we have a green day, it's a good time for me to sell more calls on position that I do have. So same thing with Snapchat, okay? Snapchat was doing really well, especially when the S&P was doing well. So of course, I got on that train as well. Lemonade, okay, did really well when Nasdaq was up. Okay, so I sold some calls. Peloton, okay, honestly, for Peloton, I did sell calls on it. Of course, it's not going to be a lot of money for the leftover Peloton I do have right now, 150 shares. So I did only sell 1 contract. Because this Peloton are my leftovers from the previous time where I actually got assigned to my own Peloton stocks. But yeah, I'm trying to just farm some yield on my way back up so that I can eventually get off the stock as well. All right. But yeah, okay. Other than that, the rest of them I actually remain as it is. I didn't do anything to Palantir because I did think that Palantir was really at its very low pricing as it is. I don't think that Palantir have any more to lose. So even though we might be seeing a sudden rush for a bear market or a bull market or whatever it is, I don't think that me playing on a writing of contract would be the right way for me to actually play for Palantir. But for all the other stocks, I do think that was the right play for me to do so. SoFi, I talk about all these names as well. You guys should know it if you guys follow it. Okay, SoFi Technology. Okay, I like it a lot, but right now it's below $10. I do not really want to be selling any calls on SoFi because you do not know when SoFi can actually rebound back. Right now, SoFi is basically considered as a bank. So I really wouldn't want to be undercutting SoFi with a knife on my own by writing out contracts to cut myself underneath. Okay. Heartache was doing great, especially when crypto was doing great. Of course, right now, crypto is not doing exactly the best. Crypto currently, Bitcoin is at 45,000. I do think that Bitcoin would have some form of a retracement downwards to about 42,000 or so. If we do see about 42,000 or so, I do think that I might actually start being more bullish on cryptocurrency as a whole, especially for Terra Luna and also for the other altcoin. Of course, I'm not going to be looking too much into Bitcoin and Ethereum, although they are the pricing that I usually look out for how volatile the whole entire crypto market is at the moment. But yeah, I am very, very excited to see all this actually coming to mind. Occidental Petroleum, which is my last trade. Okay, I bought two more contract of puts on my Occidental Petroleum. Right now, in total, I have 7 puts on Occidental Petroleum. Of course, this is going to be expiring next year, so I don't really care. Simply is because this is my play for me to actually think that oil prices is going to go back down. Okay, and that's my way of hedging against the market, because if oil prices continue to stay high, I have other puts in place. I have my own hedges going on as well. So yeah, I'm just very, very excited about the Futu puts that I actually did play, because I have been talking about it over and over again. And honestly speaking, I actually doubted myself for like a good few days, thinking that, if I should even dollar cost average in even more. But yeah, I'm glad that that hunch actually paid off. All right, but anyway, let's cover some news today. All right, so let's start it off with this first, because the reason why Futu actually went down, this is something so interesting to me. Okay, US listed Chinese stock tumbled on Thursday, wrapping up their worst start of the year since 2008, as worries of a wave of possible delisting remains high. Okay, so previously when I talk about Chinese stocks, okay, be it your Pinduoduo, your Didi, your Baidu, your Alibaba, your Futu, okay, all these stocks I have been talking about, because these are companies that are actually listed in the United States exchanges, and that's fine. Okay, that's fine now. But of course, I do see a lot of concerns up front, such as how China right now having this whole no limit friendship with Russia, okay, especially with such conflicts happening, this kind of geopolitical conflicts that's ongoing in the world right now. I don't think that's going to be keeping us in a good light, okay, especially with how US can easily throw out sanctions to just delist Chinese companies, and that was what I was hoping to happen. Okay, same thing. I do not want to be this bearish guy to actually hope for the worst to happen, but this was one of the things that I did expect to happen in the long run. Okay, I'm not saying in the long run in terms of in the next 3 years, 4 years. I do think that in the future, some countries will definitely want to work together with each other. I'm not sure about how China and US, the whole chemistry between the two countries, how it's going to be like. But, I'm very, very happy as it is. So over here, you can see that the NASDAQ Golden Dragon China Index closed 5.4% lower in New York, with IET Baidu sinking at least 8%. Okay, the index fell for a 4th consecutive quarter of at least 21%. E-commerce giant with Alibaba, your JD.com, your Pinduoduo, all of them down 5, 6, 7, 8%. Okay. And where Futu is all here, okay? So under the Holding Foreign Companies Accountable Act, the SEC started publishing a provisional list of companies identified as running afoul of requirement, with the first release in early March. Wednesday saw an additional 5 firms added to the list, including Baidu, IET, and Futu Holding Limits. So, like I said, I'm very, very happy to see this kind of thing. But of course, people are buying the dip. Okay, people are buying the dip. yesterday I was kind of in this mental struggle between myself if I should sell the 40% away. But I always tell people no one have ever went broke taking a profit. So I took the profit. And I think what I did was correct. I took the profit, and I think that works out. Okay. Of course, right now, Futu is up 10.6%. Okay. And that's also when I'm going to be loading up more of my puts, because I do think that this is going to have some form of a conclusion, or at least a decisive decision at the end of the next week. And be it them getting delisted or more fears of them being delisted being around, the prices is eventually going to be going down. Okay, as much as they are trying in the pre-market, people are trying to buy back. Okay, people are trying to buy the dip on the company again. Okay, we do understand that people will eventually have to sell them for a profit. Okay, that's how the stocks market that's how the stock market has been all this time. All right, so this is done. Okay, let's talk about stock post worst quarter in 2 years despite strong finish. So yesterday, I actually talked to you guys about how companies have been doing the best for decades and such, but we are getting the worst quarter in 2 years despite a strong finish. So let's dissect this a little bit, okay? Because yesterday we went through the whole PCE. Well, I went through the whole PCE, and I realized something crazy, okay? The thing is that because the whole PCE kind of just went through the February data as it is, and it didn't really tell us anything new. Okay, it did say that consumer spending are kind of slowing down by 0.6%, which is something that we already expected to begin with, because the CPI kind of already became a foreshadow of some sort for us to know what to expect for the PCE. Okay, but it's the same thing, because the main bulk of the inflation that we are actually being worried about is going to be coming in on the 12th of April. Okay, which is going to be 2 weeks from now. That's when we actually see the CPI, and we can actually properly price oil prices, wheat prices, palladium prices, aluminum prices, nickel prices. That is when we actually properly price the actual inflation happening from the entire invasion and the entire geopolitical madness that's happening around the world. So, of course, right now we are expecting that companies are going to get the worst quarters, because now pandemic money is starting to run dry in the company, in the whole world. Actually, everyone is already getting out of their pandemic money. Okay, however much pandemic money was given to everyone, it has all been spent. Okay, be it for cash burns, to companies, to invest and loss, whatever it is, they're all gone. Okay, I don't know why they're using a Squid Game picture here. Netflix, okay, fair enough. Okay, Netflix seen its stock suffer in the first quarter. So yeah, I do think that this is a good thing to a certain extent, because I do think that in 2020 and 2021, there was so much euphoria in the market where it was all being manipulated, and it was actually kind of conjured by the government. This bull market being conjured up because we keep on thinking that the pandemic is fine. Okay, we can get through the pandemic, and here's $6 trillion. Just spend it. Okay, invest in the markets, get the economy rolling and such. So I do think that this bull market that we had before is just manufactured. Okay, I do not think that we are going to be. There is no form of sustainability for such a bull market, and of course, rightfully so, a lot of us, okay, myself included, we actually have to go through the bull market upwards and then suddenly immediately downwards, okay, via new constraints, okay, with a new variant happening, with new regulations coming from every country, war happening, inflation happening. Of course, I do get it. Okay, I do get it. Just inflation alone is enough for us to actually drop off from the bull market completely. But we have so much more than that. Okay, we have so much more to deal with in the economy than just inflation. And I can really see why companies are not just doing so well in this quarter as compared to the quarter before. All right. Let's see. Let's look at inflation weighs on consumer spending growth in February. So I talked about this earlier. Okay, so 6.4% according to the PCE. Like I said before, PCE is something that the Federal Reserve like to use a lot more than the CPI. I don't know why, but sure. Okay, it doesn't really matter to us because it's going to be very, very tightly, closely knit. Okay, because CPI basically goes via all the consumer pricing, PCEs are more like every consumer, what are they actually spending on, as compared to CPI, which is everything that a consumer spent on. Yeah, there's a very, very thin line between it, which is why I'm not very sure why they want to do it this way, but sure. Okay. So over here, I'm pretty sure they will be talking about how, okay, so over here, see, personal income increased by 0.5%, but of course, at the same time, people who are actually spending money actually drop. Okay. Employers scrambled to hire new workers. Okay, that's a good thing. Okay. I did saw an article earlier this morning before I went to work, where they were talking about how, there's going to be a hiring boom. That's a good thing. Okay, that's a good thing for us to have a hiring boom, because we're actually going through an increased interest rate hike, and it'll be bad if we do not have max employment being clamped down yet. So it's good that we are actually having to see a hot labor market as compared to like a real hot real estate market and such. All right, but anyway, moving on to the next news. Biden to draw down oil reserve in bid to ease gas prices. This is actually something we talked about already. Okay, but yesterday Biden basically came out on live on the White House YouTube channel, basically, okay, saying that he will be tapping up to 180 million barrels of the government oil reserve to help tamp down near record high fuel prices as unprecedented government intervention into oil market following Russia invasion of Ukraine. So previously, he was also saying that he will be tapping into 1 million barrels a day for US, and of course the entirety of US used up to 19.68 million barrels of oil a day. Okay, and of course that 1 million barrel of oil is definitely going to help, even though it is a little bit, but I still think that it is substantial to a certain extent. And of course, President Biden is intending to tap up to 180 million barrels of oil, aka for the next 6 months. So yeah, it's pretty good. It's pretty good that we are seeing that happening. But the issue is there's going to be an article about this as well. Okay, but the good thing is that oil is going to be slightly going down a little bit, which is also works well with my trade, because I do think that Occidental Petroleum should be going down as well. But yes, U.S. crude prices did drop. Okay, U.S. crude prices did drop by 7% on Thursday, which is yesterday on the news. But the effect on retail gasoline prices, which lag the crude market, remains to be seen. Okay, so yeah, something that now we have to then take into consideration is over here. Biden embraces oil as Ukraine war overwhelms his climate agenda. Okay, let's read this a little bit, okay? Biden delivered his strongest endorsement of oil on Thursday, ordering an unprecedented release of emergency U.S. crude in a move that gambled his climate-saving credential on lowering gasoline prices in an election year. So for people who want to know like the basis of how this usually works, if the Democrats or the Republicans want to go with a climate-friendly election sort of thing, they'll say that we do not want to use oil. We want to get rid of ICE vehicles. We want to get into the EVs. We want to use better. We want to electrify the entire world. We want to use solar panels and such like that. Okay, it works. Okay, usually. Okay, people who hear about all this, climate change and such, we are going to vote for who and such. But with this sudden geopolitical madness that's happening, Joe Biden basically have to actually stand on the side of oil, because we have not actually fully transitioned over to the whole full electric United States that we actually hope for. Neither did we actually hope for that transition to be happening in 2022 either. Okay, we are probably hoping that to be happening in 2035 or 2040. Okay, even Ford Motors also talked about something along that line as well. So I do not think that this is going to be hurting Biden as much. However, I do think that for Biden's election year, which would be 2 years from now, it's going to be 2024. Yes, I do think that Biden's going to have a hard year to run if Trump is going to be running as well. Because first things first, Biden had such a tough term in office. Of course, this is going to get a little bit political, but I do think that Biden had one of the worst term in office. with Afghanistan situation, pandemic, war, oil prices, inflation. Like, man, like I don't know. Like, there's so many things that happen during this period of time. So and I can also understand that there are a lot of people who are going to start losing confidence in their in Biden as well. So hoping that the Republicans or the GOPs are able to actually help to bring the country back to where they were before. All right, but anyway, enough about politics. Okay, losing 5% was best you could do in stocks and bonds this quarter. Okay, this is how bad it is when an article says losing 5% is the best that you can do. But of course, if you're shorting the market, it's slightly going to be different. So there's something crazy about this whole situation, all right? All right, so war, inflation, and the lingering impact of a global disease made the first quarter a historical rough one for stocks and bond investors. Across equity and fixed income market broadly, the least bad performance among US assets were decline of 4.9% in the S&P 500 and speculative credit. Okay, so they are basically talking about like even your better stocks, okay, be your Microsoft, your Apple, your Meta platforms, your Google and such, they're all kind of down. Okay, and I'm not gonna lie, that's kind of how it is for the past. From the start of January, it has kind of been like that. Okay, the market hasn't really been very, very nice to us. So yeah, but then again, of course, Bloomberg has always been a bearish sort of article. So I don't know, man. All right, how Biden's billionaire minimum income tax would hit the wealthy. Refreshing. Okay, the billionaire minimum income tax raised a number of questions among the America's ultra rich and those advising them. Okay, so I already kind of explained this to you guys, but let's go through this. Okay, the proposal would require that taxpayer worth more than $100 million pay a minimum of 20% on their capital gains each year, regardless of whether they sold assets for a profit or continue to hold them. Okay, so first of all, a lot of people who are worth $100 to $110 million dollars are gonna suddenly be worth $99 million. That's the first. Okay, and then for people who actually have to go through with the whole capital gains of 20%, be it realized or unrealized for the whole 20%, I do think that that's going to be a little bit of a trouble. Okay, so let's say, for example, a company. Okay, I'm not going to say like a specific company. Let's just say company A. Okay, is currently worth $500 million. Okay, and the CEO is currently holding 30% of it. All right, so hold on, no, let's just say $1 billion, so it's easier for me to do this math. Company A is worth $1 billion, all right, and the CEO have 30% profit, 30% stake in the entire company, so he is now worth $300 million. Okay, if he went into a bull market, every single year he have to pay 20% of whatever he actually owns. Okay, which honestly speaking, if he's in a bull market, he wouldn't care. But if he is in a bull market and right after the tax year passes, and then he entered and the whole market entered into a bear market, he would still have to pay 20% of the unrealized profit, because even though he didn't sell it, he would have to sell a little bit of his stock just to pay off those taxes. So yeah, I don't know what the administration really thinking. I'm not sure if they really thought it through, but hey man, if they think that this is the right way to do so, go right ahead. Okay, go right ahead. How many people will pay this tax? $100 million wealth threshold means the richest 0.01% of Americans, roughly 20,000 households, would owe this tax. Like I said before in my other video, okay, it's not about the 20,000 households that's going to be affected. These 20,000 households that's going to be affected are the top 20,000 households who can influence everyone else. Okay, these top 20,000 households are probably people who are in Target, in Walmart, in Amazon, in Facebook, in Google. Okay, and all these people are not going to be swallowing this loss on their own. They are going to be pushing the cost back to the consumer. And if the consumer do not want to take it, then the people who are working will have to take it. be it a wage decrement, okay, a wage cut, okay, be it recession, like a depression sort of thing, or they can just kind of be like, all right, we are just gonna cut off some of the people that we don't really need. We're gonna have some form of a reform for the workers and such. There's gonna be a lot of changes when you actually touch this 20,000 household. Of course, I'm not saying that this is the wrong thing to do. Okay, I'm not saying that this 20,000 household should not be taxed in any way possible. But I do think that them actually doing this to the 20,000 household, they are not really helping the rest of the country in any case or form, because everyone is going to be a consumer, and end of the day, they have the rights to push the price over to the consumer, and that's just going to create more inflation. So I don't know what they're actually thinking about. All right, now, I don't want to hop on this for too long. All right, so let's talk a little bit about Russia, Ukraine, okay? Because Russia just said that Ukraine helicopters made a rare cross-border strike. I don't know if this sounds like an April Fool joke, but Ukraine be fighting back. Ukraine be fighting back, because they say that this is a rare thing for Ukraine to actually come back to fight in Russia instead. Okay, correct me if I'm wrong, but I think this is the first airstrike by a foreign country in Russia since World War II. So yeah, it's gonna be a first time for anything. Okay, first time for everything. It's kind of crazy that we can't see this now. Okay, all right. Next up, we have the one and only Trump. All right, so the spec tied to Trump's social media venture sinks as download slumps 95%. They're talking about DWAC, okay, DWAC, Digital World Acquisition. Right now, DWAC, let's see. DWAC is at $64 right now. Okay, $64 is not even that bad. I'm not gonna lie. I do think that DWAC is going to be affected. I think Fundware is going to be affected. These are the two names that is most likely going to be connected to the whole Donald Trump's the Truth Social or something along that line. I think that was the name of his platform. So yeah, I mean, the downloads going down. So they're just talking about how the spec is also going down. So yeah, nothing crazy about that. But okay, anyway, that's all I have for today. Anyway, I'm very, very happy, about the market and such. Just to give you guys an update again, Futu is currently up 11.4%, and I'm loving it because that just means that I can load up a lot more. I'm so happy about it. But of course, I do think that I remember Monday being a holiday for the Chinese. I think it's Qingmingjie. So if it's Qingmingjie, then there is a chance that they might not be trading. But I'm not sure if they're gonna particularly be affected if they're in the US market. So I do need to check up on that. Because if anything is being affected, then there's a possibility that I might not actually be buying more Futu puts today. But yeah, that's kind of all I have for today. Anyway, thank you guys so much for watching, and I'll see you guys tomorrow. Yeah, tomorrow.